Hi, it's Jack here with your September sales market update. Activity levels are down in the face of economic headwinds, with forecasts that the Bank of England base rate is close to its peak, some affordability pressures should abate, and a greater stability and increasing confidence should emerge within the housing market the next few months. Average house prices fell 0.8% month on month to 259,153, with the annual rate of price growth falling by 5.3%, down from minus 3.5% in July. Given the rise in borrowing costs and economic pressures in recent months, as well as a traditional summer slowdown, the fall is unsurprising. As we come into autumn, demand is expected to build again, with a soft landing expected to play out, supported by strong wage growth, lockdown savings and increasing flexibility from mortgage lenders. Home sales are predicted to rebound in the first quarter of 2024. Transaction numbers are proving resilient, with HMRC reporting that 86,500 sales took place in July, which is up 0.8% on the previous month, although 16.3% down on last year higher levels. Zoopla estimates that the number of house sales completing in 2023 is on track to be more than a fifth lower than in 2022, with around 1 million homes expecting to change hands in the UK this year. Rightmove reveals the supply of properties remains constrained, standing at 10% lower than the same time in 2019, in part preventing larger house price falls this year. Mortgage approvals have improved since the start of the year, although remaining 21% below the average for the 7 years prior to the pandemic. According to the Bank of England, there were 49,400 approvals in July, which is down from 54,605 in June. First-time buyer purchases and home mover purchases were down by 28% and 30% respectively, largely due to uncertainty in the market and affordability concerns. However, a brightening economic outlook means mortgage rates appear to be on a downward trend, with major banks cutting rates again and increasing flexibility on deals to ease some pressure on UK home buyers. Moneyfacts report that the 5-year fixed rate is at 6.19%, down from 6.37% at the end of July, with rates expected to fall further in the year. With high costs of borrowing, cautious buyers are coming up against optimistic sellers who have yet to accept the cooling of the UK market. The pendulum is swinging in favour of buyers, with 70% of agents surveyed saying it's a buyer's market and only 3% saying sellers are in more control. In light of heightened mortgage rates and living costs, smaller, less expensive properties are in demand. According to Nationwide, flats have remained relatively more affordable, with its average prices having risen by just 13% since the start of the pandemic, comparing that to 23% for detached properties. As interest rates have climbed, the market has been supported by an increasing proportion of cash buyers. Based on H1 trends, cash sales are expected to fall only 1% over 2023 compared to 2022 levels. However, the number of mortgage sales is forecast to be 28% lower due to higher mortgage rates. Outright home ownership with no mortgage is the largest group of property owners, with 8.8 million homes in England owned outright, sheltering owners from the mortgage rate storm. Partly due to less reliance on the mortgage market, prime market annual growth is resilient, currently at 5%, and positive in all but one region of England and Wales. The average price of property in the prime market stands at £1,296,404, which is 31% higher than at the same time in 2019.